Well, hello everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. And what a report we have for you today. This is December 7th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And that's exactly what we're doing. And let's look at a few charts. First of all, these are the QQQs, the Nasdaq 100 stocks, and we picked the best stock out of that 100 that you'll see right at the end of this report. But right now, the whole ETF itself is sitting at new highs. You could see where it broke out here, and it looks like if it goes down, it might, well, it definitely is overbought in here. But if it goes down today or on Monday, we might get a little sell signal here, and it might revert right back to this 20-day moving average, which is the green line down here. But down here, we have a buy signal on the intermediate term indicator, which has turned up since last time we spoke. And so this indicator or this index is looking very, very good. And let's look at the Dow, and we can see the Dow starting to roll over a little bit here. And we can see up here we are reaching lower highs as the market made higher highs or slightly higher highs, or I should say even trying to hit that 45,000 level. Can you believe that on this index, folks? And will you get the reversion to the mean? Well, look down here. It looks like this indicator, this intermediate term indicator, is turning down. And this index is turning down toward the end of the day. I took a copy of this chart a little while ago, and this is a Friday I'm recording this, and this index has turned down, so we may be getting a little sell signal in here. Again, probably reversion to the mean, which is this 20-day moving average. And let's look at the transportation, because what the transportations do, it has to agree with the Dow Jones and the S&P 500, because everything is transported. Raw goods are transported to the manufacturers. The manufacturers make the product, then transport it to the retailers, and the retailers then transport it to us. In the old days, we used to go and transport in our cars and go buy the things that we wanted. Now we push a button on our phone and somebody delivers it to us. By the way, Tesla is working on robots to deliver packages to our door. Just read that the other day, so that's interesting. But it does nothing to this transportation average here, which is not looking very good. And it's coming down below that 20-day moving average, and it's turning that 20-day moving average down. So this is the first time in a long time that it actually has turned down. But today it's doing fairly well. However, down here, we definitely have a sell signal on the transportation average. So that means we don't see the Dow going let's go back to that. We don't see the Dow going very much higher here, because it's almost on a sell signal in the short term up here. And then down here, this intermediate term indicator looks like it wants to turn down. So we have to be very, very careful in here, at least with the Dow. And let's go to the S&P 500, and it just looks as strong as ever. It just keeps going up, and we'll see if we get a little turn down up here. It's not happening today, so I'm recording this Friday afternoon. It is doing very, very well indeed. And down here, the indicator, intermediate term indicator, is still pointing up. So we have the Dow that's starting to look a little weak after a strong, strong move. Don't get me wrong. When I say weak, it's weak relative to the strong, strong move. And the S&P 500 is doing very well. And of course, we started out with the QQQs, the Nasdaq 100, which are doing very, very well also. And here's the technology. Wanted to show that because we have a lot of stocks from the technology index that are in our top ETF portfolios. We run two top ETF portfolios, and one of them has a lot of XLK or technology stocks in them, and it has reached a new high. And that all high goes all the way back here, folks, and it's done very, very well. You could see it reached that high here, got turned down, then started moving up, 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 and finally broke through that high level and is now sitting at new highs as I'm recording this. And the XSD, the semiconductor index, or the semiconductor ETF, which has had a hard year this year, and just doing what the S&P is doing. But the S&P is doing fantastic, by the way. One of the best years in a long time. And the semiconductor stocks, some of the semiconductor stocks are not doing well, and others are doing very, very well. Like NVIDIA, yeah, doing very, very well, bringing this average up. So we are sitting not at new highs, because here's the new highs back here, way back here in July, and we haven't reached that yet. So we'll see if we can do that. But we've been getting higher highs in here. You see this line in here? That's pretty decent. And we kind of like that. And we do have a buy signal, but we're getting overbought in the short term, just like all the other indices where on the short term we are overbought. Now let's go to our sector stars, and these are our favorite ETFs. We take ETFs that have performed well or better than the S&P 500 or as good as the S&P 500, and we take the best stocks out of those ETFs if they fit the bill, and those are the ones we invest in. We have about 18 stocks right now. This is up 38%. Now the S&P is up an astounding 27.8% this year. And that has us worried going into next year, because every time the S&P does very, very well in a year, the following year we have a little correction in there. So we're looking at that, up 27.8%, fantastic. QQQ's up 28%, a little more than the S&P. But the best stocks out of those ETFs up 38.8%. Folks, that's fantastic. Just think about your portfolio returning 38.8%. You think that's good? Wait till you see this next top stock ETF, and we're looking at the Nasdaq 100, which stock symbol is, or the ETF symbol is the QQQs. We took the top 12 stocks out of that, and we are up an astounding 48.4%. Folks, that's fantastic. And one stock that we sold, which we bought for at just about the exact same price, was Tesla, and we're sorry we sold that, of course, now. We're sorry. So that doesn't count in here at all. We sold it at just about the same price that we bought it. We didn't gain anything on that, but we have some stocks that are really, really up there. NVIDIA is one right in here. Netflix is one. We have Meta Platforms, which is another one. Up here, Amazon has done well. So, folks, the Nasdaq 100, which is the portfolio that I am personally invested in, and it is doing very, very well. Very, very happy. A 48.4% return with 3 weeks left to go in the year, and we're having another astounding year. By the way, this portfolio, with the absence of one stock only, but we've changed two stocks in this from last year. It was up 97% last year. And over the past 5 years, up over 450%. So what we're just trying to show is that if you take any index and you take the best or the above average stock in that index using the clean surplus methodology, chances are, like about 99% of the time, you will outperform that ETF. So those of you who love ETFs, you're going to love even more the better ETF, because each ETF, each mutual fund, each index is made up of average stocks, better than average stocks, or below average stocks. Why invest in the below average stocks if you have a methodology, which we do if you follow our newsletters, methodology that can pick out the better than average stocks and the below average stocks? So why invest in the below average stocks? Let somebody else do that. You don't have to do it. Pick out the best stocks, and with the market up an astounding, and I'm talking about the S&P up an astounding 27.8%, this portfolio is getting close to doubling that. Very, very close at 48.4%. Very, very nice portfolio. So folks, We had another fantastic week. We had a fantastic month in November, and December is looking very, very good, but we're getting overbought there. But we're still in the Christmas season, and usually November is the better month between November and December. So December just kind of hangs out and absorbs the great rise that it had in November, and this year was the same. We had a fantastic November. December is turning out pretty good, but we're overbought by a lot in a lot of the indices. But for now, with the portfolios up so much, every portfolio that we have is up in the 30%. The growth portfolio is up around 35%. And in one case, 38%. They were overweighted in one of the stocks. But the all our portfolios are either in the 30% or the 48%, the one we just looked at. So we're doing very, very well this year because we know how to select and pick and find the above average stocks. And that's what we put in our portfolios for folks. Just want to say one thing. I've looked at a lot of portfolios over the years, especially when we did our fun radio show. A lot of people would send us their portfolios, and you know what? You all had the good stocks in your portfolio. The problem is you had a lot of the below average stocks in the portfolios, and none of you did anywhere near as well as the stocks that we were reporting on the radio at that particular time, because we left all those below average stocks out. And you could too. Just follow our newsletter, folks. But meanwhile, without even thinking about that, go out this weekend, have a good time, have a good weekend, have Sunday dinner with your family. And folks, most of all, stay safe, and we'll see you back here in a few days.